Hey guys, what's going on? My name is Leo, and in this video here, we're going to be doing a stock analysis on Sony Corporation. They just said they were going to acquire Bungie, the iconic developer. You know them for developing games such as Destiny, and I guess more importantly, Halo. So, let's take a look at this company here and see what it's worth. We're going to do an analysis on the company metrics, looking at the financial situation of the business, and finally do a price analysis and see what we should pay for Sony and see if it's worthy to be put in our portfolio. Without further ado, hit him with the intro. Sony Corporation. Let's take a look. Before we do that, guys, make sure you hit the like button and the subscribe button. I think it's down here. Yeah. Do that. Helps me out a lot. Makes me feel warm and fuzzy. You know, helps out the channel, YouTube algorithm. Just, love all around, right? So, Sony Corporation, you know them for making PS5s, or at least they made 5 or so PS5s, then they're out of stock, and I think like 3 guys have them and trying to scalp them for double the price. Market cap, $138 billion company, located in Japan. Let's jump into it. Company metrics. Price to earnings ratio is at 17. Love that. 5-year average PE is at 22. Also love that. So we're in that 20 range, under 20 for the 20 trailing 12 months, which is great. We want that. EPS, what? No. EPS is 700. No, oh, you know why? It's reported in yen. Return on equity. Average is 15.81. We've dropped a little bit for the trailing 12 months to 14.49. Okay, it's whatever. It's in that 15 mark. It's big. Doesn't scrape by, but it's around there. Profit margin 9.47%. Yeesh. 7.47 as the average. Okay, it's an increase. The reason why the revenue and net income and free cash flow looks like this is because the reported currency is in the yen, Japanese yen. So I'll have to make sure it, I guess, transfers over, converts to US dollars. So let's see. 556 and average is 832. Well, we're below the average of the 5-year average cash flow. So I don't feel great about that. They do pay off a small dividend of 0.24%, and that is at 61, billion yen being paid out. That's 832 billion on average. Easily can pay off that dividend. Don't have to worry about that. Return on invested capital is 4.81 compared to 4.93. We want this number to be over 10 or 10 or higher. Oh my god. An Altman Z score is 0.51. Yeah, this box here, I'm not too happy about that. 0.51. I mean, I'm gonna take it as a grain of salt, this Altman Z, because I mean there's so many facets to Sony. They have the gaming sector, their movie sector. There's a lot of operations going on. It's a multifaceted business, so a lot of moving parts. Say it's at 0.51, it says it's at risk of being bankrupt the next couple of years. And to be honest, looking at this little zero here, which we'll get to afterwards, might have something to do with it. Piotrowski score of 4. That's a low number. We want this number to be between 8 and 9. Let's jump into financial evaluations. We got a score of 8 out of 10. So pretty decent. Let's see if this makes sense. P ratio under 22.35. We want this under 22.5. Barely squeaking by. Alright, Sony. Current ratio 0.61. That is not healthy. We want this number to be over 1.5, guys. And 0.61 means we have a lot more liabilities and not enough assets to cover those liabilities. So if there was ever, let's say, a state of emergency, like Microsoft buying all these companies up and just making all these things exclusive, and this company starts tanking and they gotta liquidate stuff, hey, Sony might be in a little bit of trouble. But we're at 0.61, not the greatest. Hmm, that's unfortunate. Return on equity average is 15.81%. We want this to be over 15. So they're squeaking by on that as well. There's a lot of squeaking by with this so far. EPS growth, my God, 10,000% EPS growth, a phenomenal achievement. So I guess yeah, revenue's been going up over the last 5 years. I'd love to see that. And earnings per share. So it's, as an investor, like we want to, that's always a positive. Debt to equity, 19%. So that's great. We want this number to be over or under 50%. That means they're leveraging their capital through equity within the business and not debt. However, this not healthy. So that being said, share dilution it's decreasing by 0.32% over the last 5 years. Nothing crazy, but still a decrease nonetheless. So that's going to get a point there. We want to see them buying back shares, especially if the company is undervalued. That means they're going to get their shares back for cheap. You get more ownership of the company, and it's just a better situation for everybody. Because dilution in the company will absolutely kill you. So Sony buying back shares, awesome. Assuming these shares are undervalued, which we'll find out afterwards. Net income growth, all right, 1,500%. Last 5 years, great. So I wonder if there's like some negative numbers in there that they're kind of recovering from. But regardless, we have an increase. 5-year free cash flow growth, 76.12%. Okay. Good growth. Get a point there. And then 5-year return on invested capital average is 4.93. And that's 0 there. And revenue growth is at 2.37%. We get a point over here. Okay. So the liabilities is a concern. Return on invested capital average, they can't invest their money great at all. So this might be a larger problem. This I'm not too concerned about, but we shall see. We'll see. Yeah, it's not bad. It's not bad. Like the things that I'm like I'm not too worried about is like out of all the categories here, like return on invested capital average, I mean sure, like if the company wasn't growing the net income, the free cash flow or the revenue growth, I'd be like, you know what? Stay away. The company does not want to improve. Current ratio that can change. And they're leveraging more capital and they're generating through equity. Like that can counter that. So overall, not too bad. But let's see how that fares with a price analysis. Now, before we go into the price analysis, if you like what you see here with this application, I'm developing it. This is an app that helps me screen through some stocks. I will eventually make it available to the public, but I need your help. I want to know if you guys want this software, and I'll put you on a list, and it will be available either as a web app or an app for your phone. But I mean, if you like what you see here, send me a message, a DM, and then yeah, we'll work something out. But this is definitely going to be worked on further, and this is what I use to find companies that are at least worth my time. This is my initial breakdown before I go into a deep dive to, the company. All right. Price analysis. Let's find out what we're going to pay for Sony. 10-year analysis, because I think they'll be around for 10 years, hopefully. If they don't become a fossil like Sega or any other company, but no. I mean, maybe potentially in gaming. I doubt it. I know Sony fanboys are probably hearing me say this, and they're hating me right now. I don't think they're gonna go anywhere, to be honest. Don't crucify me, please. Hit the subscribe button. So let's take a look at Sony revenue growth. These numbers 2, 3, and 8. So I'm gonna say this 8 number here was probably just an anomaly. To be honest, 1 year for all these categories here, especially profit margin, 1 year anomaly because we had the PS5 come out. People were at home playing video games, so huge spike in video game play. So I think our numbers are definitely in this 5 to 10 year. But I will be a little bit more liberal on our aggressive side because I like Sony. I actually do. So we'll go 2, 3, and 4. Profit margin. Let's do 2.5, 3, and actually, you know what? Let's do 0.5, 4.5. You know what? I'm being liberal with it. Let's do it. Let's do 6, 6.5, and 10 for price free cash flow. Let's do the signature 14, 16. Oh, you know what? No, hold on. Let's see. Imagine a $38 billion company. Think about this logically here. 26 price to free cash flow. Would it be that high? I mean, I think a 12, a 14, and then maybe a 16. PE ratio. Let's keep it around 12. 16. Desired return. Let's plop it in. We'll do 13, 13, 13. And guys, it's red across the board. I feel like maybe I was a little bit too conservative with this profit number. But if that's the case, these are our assumptions here. And the company needs to fall in half before it can reach these numbers here. It's close with our high side of 97. And that's assuming a 4.5% profit margin here. I don't think the revenue is going to grow that much. You know what? No, I take that back. I take that back wholeheartedly. Because, listen, PS5 is out. It's out of stock, but it's out. But they also have a lot of other projects in the pipeline. You know, they have this Last of Us show that's coming out. They got the Uncharted movie coming out. This might open the floodgates to a lot of other, opportunities for this business. At least to generate more revenue. They're acquiring Bungie for 3.6 billion. They're gonna go head to head with Microsoft. Gaming is just it's speeding up. It's going crazy. So maybe we'll see some more revenue growth in the future. I want to believe that Sony's at the. Here's my thoughts on Sony. I feel like they're either at one or two places, and they're either they're at the tip of a needle, and they're either going to shoot up in massive revenue growth, or they're going to fall down the hill and slow down a considerable amount. That's how I kind of feel with it. I want to believe that they're going to be skyrocketing based off how the industry is going, based off from a movie perspective and a gaming perspective, but I'm not too sure. Let's change some numbers around and let's see what it would take to hit. So let's say we use this 9% as a buffer. You can go with 5, 6, 7. Still conservative, but still around our profit margin. Let's do our low side as 3, 5. Make this one 4.5. This one 5.5. I made free cash flow growth, free cash flow margin 10% over here. Oh, interesting. Wow. Um, huh. Let's. I must have missed that. I don't know why I did that. Okay, let's do 7. No, let's humor it. Let's go 9, 10, and then we'll put 11, and then we'll keep the E just the same. All right. So in this range here, we're almost about there. Nothing on a conservative and moderate side, but our high side is hit at a 130 valuation. Our moderate, get that 119, 117, and we're just in that range. So that being said, if you believe that Sony will hit, a 5% or so, let's say 6% revenue growth over the next 10 years, and hit a profit margin of 4.5%, free cash flow margin of 10, potentially very likely, because we can see those numbers are historically here. These numbers, it is on a conservative basis because it is in between that 5-year or 10 and 5-year range. This revenue growth, though, I don't know. I don't know. It's just to see how well this acquisition pays off, and let's say their movie business, right? But yeah, that's what I mean. I feel like they're on truthfully, they're on the needle. So I want to believe it would have to come down to in between here. I think this makes sense. 32, that's super low. But I potentially I want to see it maybe in the 80 range. If it goes down to the 80 range, that would make a lot more sense to me. In order to purchase this company. And if this is new to you and some of this just doesn't make sense, essentially what I'm looking at here is, and what you're probably asking yourself, why does this guy want the stock price to fall? Why does he, if he believes it's a good company, just want to just buy it and then kind of just wait for it to go up? Because I do believe you can overpay for a company. I think Sony's a pretty decent company, but I don't think it's decent enough be paying $111 for it currently. I think I want to pay for this company. If I'm going to buy this company, I want to beat it down until it gets into this 82 mark, at least between the 70 and 97 range. 85, I would start looking at this thing and say, you know what, it's worth potentially buying. And I believe it hit that. I believe it. Last 3 years. Let's take a look. Quick look. '98. When was it? So, yeah. 89. October 12th, 2020. So 2 years ago. Okay, we were still getting out of this pandemic bubble crash or whatever. $74. It'll get there again, I think. March 12th, one of its lowest points here, $52. Just 2 years ago, folks. Just 2 years ago, it can get there. But that's what I believe the company. I don't want to pay a high premium for this company. I want to pay what it's approximately worth. Their acquisition of Bungie totally makes sense. They're gonna go, head to head with Microsoft. So you know what? They got to start, loading up their cannons. But yeah, guys, that's my thoughts on Sony. I want to see it go down to the $80 mark. More importantly, I want to see that they at least have a lot more assets on file, on hand, to cover the liabilities. And I would like to see, get more of a higher return on invested capital. 5-year average is not blowing me away, because I don't know if they're gonna get to that point anytime soon, but definitely current ratio, I guess, maintaining their debt levels, that's important. Anyways, if you found this video helpful, please drop a like, hit the subscribe button, and drop a comment down below of a company that you would like to see evaluated. I'd love to run through the software and see what numbers we can get out of it and find an applicable price. But yeah, those are my thoughts on Sony. I'm gonna go probably play my PS4 because God knows when a PS5 is gonna be coming in stock anytime soon. And I'll see you in the next video, guys. Thank you so much for watching. Peace out.